Good morning, members, and welcome to this Pensions Sub and Pensions Board Joint Committee meeting on the 29th of November 2022 at 10:30 a.m. in the Council Hall, and those on Teams. You may be wondering why I'm wearing a jacket. It is pretty cold in here today, so I will potentially call a 5-minute recess so people can go and stand next to radiators later on just to thaw out a bit. Remote participants, please follow the good practice guidance, which includes muting microphones and switching off your video when you're not addressing the meeting. Write and speak in the Teams chat function when you want to contribute. If you're in the hall, you can do this on your iPhone or your iPad. Please don't repeat contributions already made by other members. No material should be posted in the chat function if it is intended as part of the discussion. The usual standing orders apply, including that any votes will be undertaken by roll call. If any member has to leave the meeting, please either put leave in the Teams chat function for that period, or just leave and then say join when you come back, so we can keep track on whether the meeting is correct. All members should speak clearly and directly into the microphone when making contributions, and when referring to reports, please provide reference to the relevant page and paragraph to allow everyone to follow. Please focus on contributions on areas where clarification is required, or to propose an alternative to a recommendation. First on the agenda then is the Sedern apologies and Chair's approval of members' remote participation for Pensions Subcommittee. Tracy.
Thank you, Chair. We've got 7 members present, 4 present in person at Council HQ, being the Chair, the Vice Chair, Councillor John Campbell, Councillor Dorward, and 2 present on Teams, being Councillor Hislop and Councillor Thompson. I've got apologies from Councillor Ingalls. Not present at the start is Councillor Mail, and we've got 2 vacancies on the pension sub. That's one from the Independent Group and one from the Conservative Group, following Andrew Wood coming off this committee as of yesterday, Chair.
Thank you very much, and I agree to remote participation for Pensions Subcommittee. We'll then go into Sedern apology and Chair's approval of members' remote participation for Pensions Board.
Chair, we've got 5 members present. We've got 2 members present in person, being Andrew Ferguson and David Stainthorpe, and 3 present on Teams, being Colin Graham, Phil McGrogan and Keith Walters. 2 not present at the start is Jan Andrews and Helen Conkey, and we have a vacancy following Jim Dempster coming off this board as of last week.
And I see that Councillor McGregor's put in the chat function that she's here. Morning, Gail. And I have approved the remote participation for the pension boards as well. Item 3 is declarations of interest for the pension subcommittee. Is there any declaration of interest for the pension subcommittee? Can't see any of that. Declarations of interest for the pensions board. Andy?
Just obviously I draw a pension from it, and I'm considering at this moment in time what my participation should be in the future, but obviously I'll keep everyone informed and I'll make that decision myself after taking some more advice.
Thanks for that, Andy. Obviously it's down to the member whether they do that or not. Thank you. Item 5 is the minutes of the meeting of Pension Subcommittee on the 22nd of September 2022. Is everybody happy with that for approval? And then the minute of the Pension Subcommittee, sorry. Councillor Hislop.
Chair, it's with regard to an item later on the agenda. Item 9, the record of training. Now, my understanding we had 3 months to complete this, and I realise that it could be updated today, the record of training, as against this, but it was a requirement that everybody had to do it within 3 months. Were we core at the last meeting? I'm not sure if we were or not.
I'll ask Tracy that one.
Did we take proper decisions, and were people who were taking the decisions able to take those decisions because they hadn't done the required mandatory training?
I'll ask Tracy to answer that one.
Thanks, Chair. Yes, we were quota at the meeting in September. We had 5 members present and quorum is 3.
And is Ross there or Paul to answer the question on training?
Yeah, thanks, Chair. Yes, we'll do a check, Councillor Hislop, in terms of those members that were present and participated in the decision that day who had undertaken the training. The requirement of the 3 months was something that we brought in ourselves as a fund to try and encourage and make sure we move forward in the training. It wasn't something that was an external requirement, so I don't think there'd be any issues with the competence of the decision on that basis. But I think the key point and the key underlying issue is that it is essential that we do get members of the committee and the board trained as quickly as possible. And we've been speaking about kind of further supported engagement with those members who are struggling to complete the training at present to try and make sure that happens. So that's something we'll look to update members on and get something organised so that all that are participating in these meetings have the appropriate training going forward.
You happy with that, Ivor?
Right, thanks. No problem.
Thanks.
Just so that we weren't getting into trouble anywhere.
Yeah. Andy?
Sorry, Archie, maybe this is the right time. I was going to raise it later. But the board don't take any decisions. Right? We merely oversee. So where's the requirement in law to have the qualifications?
I think Paul said that it's not a requirement in law, but it's a standard that we expect, for members to understand the pension side of things, because the training is really important for us to make sure we have that understanding. But Paul, you want to come back on it?
No, Councillor Ferguson is absolutely right that the decision making is for the members of the committee itself. We are encouraging and looking for completion of the training in terms of good practice, in terms of the board's ability to oversee the decisions and ensure effective governance of the pensions committee, but fully take that on board. I mean, I'm kind of through trying to kind of push the training of late, it's become apparent that it is quite challenging. It's probably causing some problems with some members. So I think we probably need to just understand that a bit better and see if there's a better way to support members both on the committee and on the board to make sure that they get the training. And I think I appreciate what you're saying, Andy, but I mean, I think you would probably want to ensure that the training was done by the board members as well. So I think what we'll try and do is just try and look at an approach that helps members a bit more to ensure that the training is undertaken going forward, because it has been a problem to date.
Thanks, Paul. I think the issue is obviously time, the amount of time that members have been in seminars and things like that over the last 5-6 months, because it's the start of a new term. That's probably. But we'll come on to the training later on in the thing and see what else we can do to support members to get through that particular training. Okay. Just the day item 6, did I? Minute of the meetings of the Pension Subcommittee, 22nd September 22. Yeah. So are members happy to approve the minute of the Pension Subcommittee? Thank you. We'll then go on to item 7, which is report by external audit on the 2021-22 audit of Dumfries and Galloway Council Pension Fund. This report provides members with the audit report from Grant Thornton, the Pension Fund external auditors, on the delayed audit of the 2021-22 financial statements. The report highlights that Grant Thornton intend to issue an unmodified audit opinion, and they believe that the accounts have been prepared in accordance with law and the relevant accounting code of practice, and provide a true and fair view of the pension fund's year-end position. The final audit version of the accounts and letter of representation are appended to the reports for members to approve. Barry Morris from Grant Thornton is available to provide an overview of the report and take any question members may have. So Barry, are you there? And would you like to say anything?
Thank you very much, Chair. So yes, you've got the report in front of you today. So as you've already highlighted, the proposal is that there will be an unmodified audit opinion. The key work was undertaken across the summer. There was one significant amendment that was processed through the financial statements, which was an adjustment of 11.266 million, which increased the value of the investments that you held And that was just purely down to management making a valuation based on the wrong date. So actually the valuation of assets went up by that amount because it was above our materiality level. Officers processed that. They also processed a number of and increased the disclosure in a number of other areas. The only other amendment which doesn't affect the main financial statements, but does affect the classification of your assets, is in relation to your investment in the BlackRock Strategic Alternative Income Fund. That was previously identified as a level 1 investment. Because that asset and that investment is not actively traded on a market and there isn't a directly quotable price, we considered that it was a level 3 investment. Management agreed with that, and therefore they've processed a change both to prior year and in the financial year. So that moves about £64 million worth of investments from a level 1 to a level 3 in the fair value hierarchy. I just wanted to bring members' attention to one late adjustment that was put through to one of the disclosure notes in note 19, which refers to the actuarial present value promised retirement benefits. The first table in that note hadn't been updated to reflect the fair value of scheme assets as a result of that £11 million adjustment. That has been processed now and will be in the final accounts that are published and on which the audit opinion has been based. Chair, your signature has also been included within the annual report. That is a scanned version. So again, it would be helpful if you could just minute that you're happy that your scanned version of your signature can be included on that annual report. And then we've got complete assurance from our side that you have approved those accounts in the annual report. Chair, happy to take any questions on the rest of the report.
Thanks very much, and if we minute that, I'm happy that my scanned signature is on the report. We've got Ivor to come in. Ivor?
It's maybe daft laddie question because new to this sort of thing. This is my sort of first time on here. Within the report at 3.4, and you've mentioned it once or twice, there's an unmodified audit opinion. You have then went on and said that you've made changes. How does that relate to unmodified? Unmodified means that's the opinion. And have we had that before? And this is just reaffirming the opinion you'd made previously. It's just from my own understanding.
Yeah, no, thank you. Through you, Chair. So it's a good question because people always sometimes say, why is it an unmodified opinion or an unqualified? You want a qualified one, and you definitely don't. You want an unqualified one or an unmodified one. So we work on the draft accounts that are provided to us for audit. And then inevitably there may be, excuse me, adjustments or amendments that are identified through our audit work. Now, as long as those are agreed and processed by management, then those just get put through in the final audited version of the statements. And that means that our opinion is unmodified. If we were to modify the opinion, it would mean that we had a concern that a material error still existed within the accounts that hadn't been processed by management, or that there was, if we go back a couple of years ago when COVID first struck and there were lots of property investments and the value of investments were uncertain, then we had a modified opinion to say we couldn't get sufficient assurance that the valuation of those investments was appropriate. So yeah, it's not inconsistent. So we have the draft accounts. If we identified any errors, as long as management make those errors, then we can give an unmodified opinion, which basically means that we're not bringing anything to the attention of the reader of the accounts.
Right, thanks for that.
Thanks, Ivor. Anybody else? Vice Chair?
Yeah, thank you, Chair. On page 30 of our papers, I'm not sure what page that will be for yourself, but it's the last page just before the appendices. It says that the pension fund was 92% funded. What's the significance of the 8% shortfall, or is there one? Thank you.
So again, that may be a question for officers to refer to, but many local government pension schemes have an element of underfunding in there, and the commitment is that that underfunding will be made good over a period of time. From my experience, 92% funding level is not at the lower end of the scale. So yes, there needs to be action taken over the medium term to bring that into a fully funded position. But it's not an area of concern from our perspective. As I said, many local government pension schemes have a net pension fund liability.
Thank you very much.
Officers wanted to add anything. Thank you.
Do you want to come in on that, Paul, just to clarify that point?
Yeah, I think, to be fair, Barry has summed up the position. That 92% funding level is consistent with the figure which reported to members following the previous triennial valuation of the fund. There's another valuation due next year. So that is not a new piece of information or anything that we are unduly concerned about, and the strategic decisions members have taken in terms of the fund's investments are designed to address that over the longer term.
So in layman's terms, if something was to happen tomorrow and everybody wanted their pensions were 92% funded, what we've done is we've put investments in place to make sure that a right percent is up there with yeah. Andy?
Excuse me. Sorry. I'm referring to E4 on page 50 of the document, or page 94 of the papers. And it's the assumptions that are applying. The rate of assumption they're using there for wage increases is greatly below what the current is. So what effect would you consider that would have on it? Is this the right time to ask that question, is the first question. And then if it is, how will it affect this going forward?
So I'll answer first, and then again, management may want to come in. So the financial statements were based as at the position at the 31st of March. So you're absolutely right that wage positions have changed. Now we would expect that to flow through in future years, and that will increase the potential liabilities going forward if those higher wage demands are continued over the longer term. I suspect that those wage increases are spiking at the current moment, and with the projections that inflation may start to come back to normal levels in future years, that may then decrease those wage demands. So again, the exercise is about thinking about what the wage increases and salary increases will be over the longer term rather than the individual spikes. But again, not sure if Paul would want to come in and add anything from that.
I'll bring Karen in on that one.
Thank you, Chair. Obviously, just to reiterate what Barry says, the salary increase, it is an assumption over the longer term, and we probably see the current wage increases as a bit of a spike, and that should hopefully level out over time, and that will be picked up through the next valuation that will take place at the end of March if that assumption needs to be increased. But just to highlight as well, as part of the disclosures on note 5 or page 108 of the papers, we do disclose that a 0.1% increase in the salary rate would result in approximately £3 million of an extra liability. So that's just to give you a wee bit of a sense of scale of what that impact could be. But as you said, probably nothing to worry about too much, as it is a longer term assumption.
Want to come back in, Andy?
Yeah, I understand the liability bit, but I'm also aware that if wages go up by 10%, there's a bigger than 1% or 2% increase in the contributions by members. So, yeah.
Andy, Paul?
Yep, that's a fair point, and as you say, it's beyond the 1% level at the minute. What Karen's explained there is for each percent that would be the impact. So as you say, it's materially above that at the present, but we expect that to be something that is relatively short term. Obviously there's uncertainty there, but it's relatively short term when we're looking at longer term assumptions. But I think the other key point to recognise is that when we're doing evaluation, we're looking at the future liabilities and assets. But in terms of the liabilities, although wage increases will increase the cash value of future pension payments, the actual discount rate that's applied means that the future value of those payments is actually reduced at present. So it actually doesn't result in a greater level of deficit on the overall fund. It's an actuarial issue, but it's basically, although the actual cash cost will go up, the actual present value of those future payments will not be increased because of the impact of inflation.
Actually, it's what the Nationwide sends me every month. I'm more interested in, to be honest.
Thanks, Andy. Is there somebody going to speak? Ivor, do you want to come back in?
No.
Okay, that's fine, thank you. I can't see anybody else wanting to come in, so we'll go to the recommendations. Members asked to 2.1 receive the external auditor's report on the 2021-22 audit as detailed in Appendix 1. 2.2 approve the letter of representation to be certified by the Head of Finance and Procurement and appended to the audit report as detailed in Appendix 2. We're happy to approve that. 2.3 approve the audit accounts which will be certified by the Head of Finance and Procurement and Grant Thornton after this meeting as detailed in Appendix 3. We're happy to approve that. And 2.4, note that the certified accounts will be made available to all members on the 30th of November 2022 when they will be available on the Council's website. Happy to note that? Excellent, thank you very much. Then go on to item number 8, which is the pension fund update and emerging issues. This standing agenda item provides an update to members on the current and emerging issues relevant to the pension fund. This report highlights the good progress made to date in implementing the new investment strategy agreed at the last meeting of this committee and board. Particular attention is also drawn to the annual review of the investment advisors' objectives for the last calendar year, which will be reported to the Competition and Markets Authority following this meeting. Cam Donaldson is available should members have any questions, unless you've got anything to add to it, Cam.
Thank you, Chair. Yeah, just a couple of updates since the papers were published. Obviously, we've had good progress, as you highlighted, in implementing some of the decisions from the last committee. I think in the papers it says that we're due to hold sort of manager selection interviews for a multi-asset credit manager. I'm not sure if you've had the date in your diary yet, but we've had governance confirm that that's penciled in for the 31st of January. Hymans Robertson are assisting us with the shortlisting just now, so we should be in a position to do those manager interviews on the 31st of January. It also states in the paper about the actuary contract, confirmed that is out to tender now, with the tender returns due in on the 9th of January, so we should be in a position to get that new contract in place in January as planned. And they actually also confirmed that they're confident that the DGHP final transfer will go through by the end of December, but I've not got a firm figure on that yet, but we'll update at the next committee. And just happy to take any further questions.
That was going to be my question. That's okay, you've answered it there, that's fine. Any members, any questions? Can't see any, so we'll go to the recommendations then. Members are asked to 2.1 note the update in relation to the implementation of the agreed investment strategy as detailed at paragraph 3.1. Sorry, Ivor, sorry, you wanted to come in?
Just a quick one. Is there any issues emerging with regards to the, shall we call it, trustonomics that caused a problem with gilts?
Karen? Paul?
I don't think there's any specific issues in relation to recent decisions that members need to take into account at this stage. Obviously, various economic factors are being taken into account, and they will have impacted on some asset valuations on a temporary basis immediately beyond the end of the quarter that we're mainly reporting on today, but we'll look to pick that up going forward. I don't know whether that's something Ian will maybe make some reference to in the kind of overview later on, but it's not something we feel as though the committee need to be particularly concerned about. And obviously there has been a fair degree of stability re-established since those initial decisions.
Ian, I see you want to come in there, so you want to come in?
Yes, thank you, Chair. Sorry, I put speak before Paul gave the answer, which was exactly what I wanted to say. So I will touch on it in my quarterly performance report, which I present later on in the agenda. But thankfully, given the amount of press about how badly that affected UK pension schemes over the period, the fund was not as negatively impacted by this as we saw some were, particularly private sector pension schemes. But yes, I'll touch on that in the performance report later.
Okay, thanks, Ian. Ivy, happy with that?
Yes, that's fine, thanks.
Okay, thanks very much. We'll go to the recommendations. 2.1 is to note the update in relation to the implementation of the agreed investment strategy as detailed at paragraphs 3.1 to 3.8. Happy to note. 2.2, note the annual review of investment advisor objectives for 2022 and that these objectives will remain in place for 2023 as detailed in paragraphs 3.9 to 3.11. Happy with to note that. 2.3, note the current and emerging issues that will impact on the pension fund as detailed in paragraphs 3.12 to 3.14. Happy to note. And 2.4, that further updates on these issues will be brought to future meetings of this subcommittee and board as required. Happy? Thank you very much. We'll then go into item number 9. This is a standing item on the agenda, which is the annual training plan, with an update on that training plan. This particular report highlights a significant number of members of the subcommittee and board have not completed the pensions regulator training and are asked to take steps to ensure that this can be completed by the end of December. If members fail to complete this training, this could impact on the fund's MIFID status. I will now open the floor to any questions, comments members may have, although there has been already a couple of questions on this, but to clarify, it's a standard that this pension fund put in place. It's not a legal requirement, but I think it's important that members actually do the training. I also think that there is a requirement for support for members, and Ross has actually said that he would be quite willing to come into the members' lounge and do some training with members. Is Ross on the day?
No.
He's on day off. Okay. But if members have any other questions, then please come forward. So just to take that apart for where Ross is available to members, Karen, can you make sure that Ross has got some dates and times and maybe check with members if they're available during that particular time? The reason I'm asking is there has been some emails sent from members to get support, but they haven't been answered.
Yeah, I'll definitely follow up with that. I mean, if it is easier, it might be like easier sort of providing support on a one-to-one basis at a time that suits individual members if that's easier, because I think we've run a couple of group ones before that weren't that well attended, but again, just to reiterate, we are happy to support members in whatever way we can, even if that is sitting down with them for half an hour, sort of supporting you to get through the training and make sure that you're able to access it and work the system. I mean, I think it says the individual units are about 40 minutes each, but I don't think they actually do take that long, and you don't need to do all 8 modules at once. You can sort of do them individually. So, but again, please do get in touch if you're wanting that one-to-one support.
Thanks for that. I've got Gail, Ivor, Vice and then Andy.
Thanks, Chair, and good morning. Yeah, it's just on what's mandatory and what's, I suppose, a good thing to do, because when I went online to do the first module and the other 7, it said in the email that they would be up to 45 minutes. When you go onto the actual website, they're showing us up to 75 minutes or 60 minutes, and it's quite onerous when you're sort of trying to plan which ones you really should be doing and which ones maybe aren't quite so mandatory. So I suppose some advice around that would be helpful. Thank you.
I mean, from our point of view, we treat the pension regulator training as mandatory, so that all 8 modules need to be completed, and that's what you don't get your certificate of completion until you've completed all 8 modules. So that is the requirement, that all 8 are done. What order you choose to do them in is entirely up to yourself, or if you want us to sort of review the modules and suggest which ones are sort of higher priority, then we can do, but unfortunately to get the certificate we would need all 8 completed.
Gail, you happy with that?
Thank you. Yeah, thanks.
So we then got Ivor and then Vice.
Here, as someone who's went through it, it might be a good idea, if you haven't actually started to do it, to instruct the members where to go on the site, because one of the things I ended up doing was actually, when you go into the site and you go on the pension regulators ones, it's not the local government scheme. You have to actually click on another button, and you end up doing I think I've got about 4 or 5 extra modules that I shouldn't have done. But I think that'd be quite good, because it does look at, from memory, the ones that are not mandatory for the local government scheme are about 70, 80 minutes. But the ones when you get onto the local government part of it are actually quite easy to do. So I would say that's something that would be good to advise members of, just to make sure that they know to click onto the local government scheme rather than the other part, which is more for sort of public sector, but not from a local government side.
Okay, Karen.
No, that's it. I'm happy to pick that up as an action. For those who have not yet completed, I'll send the link and with detailed instructions on how to access and clarify exactly what modules you should be needing to complete, and then hopefully there's less sort of error and don't want you doing modules that you don't need to. So I'll circulate a message to those that still need to complete, making sure there's clarity on what's required.
Thanks for that. Vice?
Yeah, thanks, Chair. It was really just to say what Ivor said and then to sort of suggest what Karen's proposed, so nothing further, thanks.
Thank you. Andy?
Just a couple of things, maybe for clarification from here. I accept what Karen said, that we've agreed it's mandatory, all 8. So not to be mandatory, because we can have some less mandatory than others, with the very definition of the word. So who makes that decision? Is it the board or is it the subcommittee? That's the first question. And the second thing is a plea is, and maybe this is one for Tracy to take back, can we make sure when they look at the corporate diary for setting up a date, they look at the members, because there's quite a small amount here who've got external appointments, because that's one of the problems I've had in the past with some of the training they've put up. We really need to get the corporate diary to reflect all the things that the different councillors are doing. And I appreciate that's not for this committee, but that's maybe something Tracy can take back to Vlad and Company and see if we look at. So that's a plea, Karen, if we can, because there's not that many of us here. In terms of, it's not as if you're dealing with 43 members, you're only dealing with, 10, maybe, something like that in total.
Okay, Tracy's going to take that forward and have a look at that and obviously move that forward. I can't remember if we made the decision it was going to be mandatory for Dumfries and Galloway pension fund. It was certainly, maybe the fortunate thing for me is I'd done it in 2018, so...
So my understanding is it's best practice, and the pensions regulator recommends that all sort of pension fund trustees, whether it's private sector or sort of public sector, the LGPS, do complete that training. Certainly, I know all pension committees in Scotland, they make it mandatory to do this training, and a lot of some funds are actually stricter than us, that if it's not completed within 3 months, do start removing members from their committee. And obviously we've appreciated the amount of training and commitments that members have had, and we don't really want to go down that road, and we want to try and support you as far as possible to get the training completed. So I mean, whilst it's maybe not in law that you need to do it, it certainly is best practice, and it's something I would strongly support that we continue to have as mandatory training.
Yes, I certainly wouldn't want to see any members getting kicked off any pension scheme because they haven't covered any sort of training. But I think that support is welcomed, and obviously we'll try and get that sorted. Linda, John, and then Phil.
Thanks, Chair. In terms of the training, Councillor Hislop's actually asked the question in terms of the modules, because I, like him, and probably Councillor McGregor, went on to the initial modules, which are 70, 80 minutes. But interesting. So finding your way around the website would be useful, but I also think to take again, lessons learned are useful, but there's quite a lot of new members who have come on and are happy to serve on the pensions subcommittee, but perhaps need a more ABC, as you say. Where do you access the training? How do you do it? And what do you have to do? Would be really useful. Thank you.
Yeah, that'll be taken on board. John?
Yeah, thanks, Chair. I'm just looking at the appendix. I mean, There's the training plan there, and if you've got electronic devices, you've actually got the link, which I think Karen's talking about. It takes you straight to the public services scheme. There are a number of schemes there. If you just go to the pension regulator, and it's difficult to find out which one, but this particular link, I presume, is the one that takes you straight to the the local authorities pension, so that should be helpful for members. Yeah, my question really was round about the record of training, where we have mandatory and recommended ones. Quite often, I don't know if other members, but I get a hell of a lot of stuff, emails from the pension teams, whether it's Bailey Gifford, whether it's their own actuaries or whatever, and it's difficult to find out, are some of those our proper training, because you're getting invites to some of their seminars, for example. Maybe it would be helpful for the ones in the recommended, because I say that I haven't done the one in the 14th of September, or the MARC, the CBMT or the LGC, but if Ross could possibly, just make sure that we get the email to say that these are the ones that you should be on, rather than all the gumph that you're getting. Well, I shouldn't really say gumph, but all the other emails that we're getting from other pension advisors and stuff like that. Thanks.
Thanks, sir. Just to mention about the emails on the pension scheme, I get thousands of them and things like that, but, and I have asked Paul about them and things like that, and it's just, basically advertising at the end of the day for things. So unless it comes through either Ross or Karen to sort of go, I would recommend it. I went to the LGC one because I knew Ian Campbell was going to be there and I get a few pints off him. That's what I went for, so I think for that particular thing, Karen, you want to come in on that?
No, it was just to highlight that if there's any sort of training opportunity we thought would be really beneficial for members, we would issue it round. And I feel your pain about the hundreds of emails that come in on a weekly basis. Not immune to that either, but no, certainly anything that's on the training plan or anything that comes up that we feel would be of use, Ross or I will email you directly, so you can kind of almost ignore others, or if you see anything that you do fancy doing, feel free, but certainly anything that we think is particularly important, we will flag it to you.
Okay, thanks very much. Phil?
Thanks, Chair. It was just for me, the thing about the training plan and the training was that it's not, for me, the best learning environment to sit at a computer and to read through or be talked to and then get a load of questions and then hopefully click the right answers for them. And if you don't have an understanding of it and you don't have anyone you can speak to say, I didn't quite get that, what they meant when they were doing the training, you don't get the chance to question that. And what you have to do then is you then fill in your answers, hope you've got them right. And if you haven't, you're basically guessing because you still don't have the understanding, because you haven't been able to ask the question about what the bit you didn't understand. So potentially what Ross is saying or Gillian's saying, and maybe a classroom environment for the training that you can come and maybe bounce questions off each other if you don't understand them before you start answering the questions would be very helpful.
Okay, and I think the offer that Ross is going to give, that potential support is going to be there, Phil. So we'll look at all forms. I mean, there are many different types of learning environments in which we can help members of the board and the subcommittee, and we're going to try and do that over the next couple of months side of things. Okay. Okay, so we'll move on to the recommendations then. Members are asked to note 2.1, the update record of training plan for 22-23, which will be subject to monitoring at subsequent meetings of the subcommittee and board. 2.2, that a significant number of members of the subcommittee and board have not met the requirement to complete the pensions regulator training within the 3 months joining subcommittee as detailed at paragraph 3.8. And 2.3, those members have not completed should do so by the end of, it says December 2022, but obviously there are some issues with timings and things like that. So I would suggest we extend that to the end of sort of February potentially. So we've got that, and so that at least the pension regulator can understand that we've got something in place for members to try and do that over that quarter period between now and February. All right. Karen, do you want to come in now? Are members happy with that? Thank you. Item 10 is I've not got any other business. And item 11 is Local Government Scotland Act 1973, which is asking us to withdraw the public from the meeting. Are we happy to do so? And then we've got another couple of Teams applications to go into this for those that are on Teams. So if you want to go on to the first one of that now, please, thanks.